Interesting. We had the S&P go up. It moved slightly above this peak at 5669.67, rounding up to 5670. We moved a point above it, and then we turn down. We get a black candlestick. Very interesting. I talked about two scenarios: that we get a 50 basis point rate cut and the market applauds the Fed. The other is that we get a 0.25% cut out of the Fed. Market starts booing the Fed, getting a sell-off. We've had a significant rally going into the Fed pivot into the first rate cut here. But a black candlestick could be a reversal bar. Doesn't always work out that way. Sometimes they don't. We had a black candlestick over here after a big rally, and we just continued. Are we going to see the rally continue, or are we going to get a pullback? The 10 is still below the 20. We still have possibility. But again, I've made it clear, I think that we're going to end up, even if we do see market boo the Fed, and if we get a 0.25% hike, or maybe they do a 50 basis point cut, but something in the estimate for the Fed funds rate that the market doesn't like. However it plays out, again, ultimately, we pull back or whether we just start surging with the Fed and the rate cut, I do believe that we're going to go higher. I believe we're in a topping process. And again, all you got to do is look at the monthly and the weekly charts for that. Black candlestick here on the S&P 500. The Dow had a rally. It fizzled out. We ended down 15 points. The Dow's forming this multiple point negative divergence here. And again, we're at a major trend line of resistance, 125-year trend line. As I've talked about. So again, just kind of paying attention to what's going on with the Dow. The S&P pulls back and it ends up going higher. The Dow may be topping right now. I talked about the possibility of a top here. We hit the trend line and now we're hitting it again on that long-term monthly chart and the channel in the weekly time frame. No black candlestick here, but we still had the rally fizzle out, and we ended with a down day. Russell had a doji yesterday. The Russell got a doji today in the form of a gravestone doji with the cross at the lower end of the candle. Diverging with the S&P 500, it may not be done, but just something we're paying attention to. Like the S&P 500, Nasdaq also gets a black candlestick. We tried during the session to get above the trend line, but failed to do so. We opened higher, we gapping higher, we rallied, but then we came back down. Got this black candlestick. Again, a break above this level, really a close above this level. Sign of strength and could take us to give us a parabolic move towards a gap fill at 20,400. A rejection off of this level. If we get that with the Fed, then we get a pullback, a small pullback, a deep pullback, whatever, then that would be a sign of weakness. Again, the Fed be applauded. 50 basis point rate cut. I told you last week that the 0.25 point hike was favored. I thought that would change this week. It did. Current rate is 5.25 to 5.5. That's the target rate. Right now, there's a 37% chance at the moment that we'll get a quarter point cut. There's a 63% chance, which I told you this was lower the previous week. I told you it was going to go higher, and I also told you I changed my mind. I thought the Fed would do 0.5% cut based on history. And again, I thought that would fuel rally. We've had a rally ahead of the Fed. So if they do disappoint and we only get the quarter, I think we'll still get the rally up. We may get a pullback first, initially getting some disappointment that the Fed didn't do bigger hike, a 0.5% hike. See what the economic projections look like from the Fed. We'll be looking at dot plot, and the Fed thinks the Fed funds rate is going in 2024 and on into 2025. This is doing what I thought, but again, could be a letdown if we get a reversal. Black candlesticks that are forming on the S&P 500 and the Nasdaq, and forming negative diversions there on the Dow. Very interesting. Bitcoin is moving up to the trend line that's including the shadow, and we're reversing off of it at the moment. Rally of 5%, and we're reversing off of it. Does Nasdaq do that as well, or do we clear these trend lines on Bitcoin and Nasdaq and get a larger counter trend? Again, it may be that we pull back. Like I said, and I've made it very clear, I do believe that we're going to 20,400. Whether we pull back or break through this level with the Fed, we'll see what happens. And again, I think that's going to really depend. If the market is let down by the Fed initially. We'll get the rally, but they could be let down initially by the Fed. We still have this 10 below the 20 period here on the Nasdaq. We still have the 10 below the 20 on the S&P 500. Again, that could be suggesting a pullback still. So again, an attempt to get above the trend line on both Nasdaq and S&P, and it failed. S&P moved 1 point higher than the July peak. Nasdaq still nowhere near it. I think Nasdaq, as I've said, has already peaked. So we'll be watching to see if we get a pullback with the Fed or a breakout of this trend line. But again, the bigger picture is that in the next few weeks, I do think we'll be filling the gap here, whether that's sooner or later or whether we take our time and pull back or whatever. I do think you'll fill the gap up here, form a double top on Nasdaq, and then eventually, I think the next drop, you'll get the death cross between the 50 here, which is pointing down, crossing below the 200, which is what we already have with Bitcoin. Bitcoin is kind of leading the Nasdaq a little bit, but it is pretty amazing. They're both turning off of these trend lines. We'll see if Bitcoin and Nasdaq can clear these trend lines. I talked about Bitcoin in great length and detail yesterday. Bitcoin, again, it had a 5% rally. Now it's 3.68%. It had been selling off previously, but it's rallied back up above the 50, and it turned off at this trend line, excluding the shadow, turned down, hit the 10 period. The 10 got above the 20. But if we go back and we go back to the trend line, including the shadow, we've come right up to it, slammed up against it, and now we're turning off of it. So Nasdaq and Bitcoin kind of doing the same thing, surrounding their downward trend lines. Eventually, I think Bitcoin will eventually get above this level, but it might pull back to this other trend line. There's disappointment with the Fed not going aggressive, going bold with a 50 basis point cut. We might see markets pull back. Now, normally, historically, that's not what's happened. It doesn't have to play out the exact same way, but I do think eventually Nasdaq and Bitcoin will go up into these areas right here, and Bitcoin get another lower high, and Nasdaq fill the gap and get a lower high, back to a positive correlation and doing the exact same thing. Pretty remarkable. Watching these trend lines as we go into the Fed meeting tomorrow, do we clear them on Bitcoin and Nasdaq, or do we get rejection off of them? Rejection would be a sign of weakness. A break and close above these levels, that would be a sign of strength. Now, you don't have to like Bitcoin. I'm just trying to bore you if you don't like cryptocurrency. I'm just trying to point out Nasdaq and Bitcoin are doing the exact same thing. Well, we're paying attention to what's going on with Bitcoin. It was up 2.74% today. The VIX is just a fraction, literally a fraction below the 50-period moving average. If we start seeing volatility in the market, the VIX will get back above 50. If we get a rally with the S&P, it will turn off at the 50 level. The 50 above the 200, warning of a potential topping process. Seen that at other times in history, but we'll be watching to see what happens with the Fed, with the S&P. We got that. He responding to the Fed. We got the black candlestick today on the S&P. We'll see if anything becomes of that. Even if we pull back, I still think we'll get closing above the July peak. We got an intraday push above it today. We'll see if we pull back or not. We did get black candlesticks on both S&P 500 and Nasdaq. The Dow forming a triple negative divergence at resistance. So we'll be watching. I think we'll get a Fed pivot rally, but we may pull back off of the trend line of resistance on Nasdaq first. Do you think Nasdaq's going to go fill the gap at 20,400 eventually? But we've had a rally ahead of the Fed, so we might see a pullback. The Fed does not go with a 50 basis point cut. The market might boo the Fed off the stage, but eventually we'll get the rally because they're starting their rate cutting campaign. The 50 basis point cut, then maybe we get Nasdaq trying to clear that trend line of resistance. Watch that trend line on Nasdaq that I'm talking about in this video, yesterday's video. Really going to determine the next short-term move here, whether we pull back off of it or whether we clear it, get a sign of strength or a sign of weakness on Nasdaq. So we'll be watching here the VIX. If we get back above the 50, bad things will start happening on the S&P. If we hold below the 50, then the S&P can continue the rally. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please support the channel. Take a moment to do that. I would really, really appreciate it. I don't have any sponsors, just a direct relationship with you. I don't have sponsors because I turn all those offers down because I don't want to sell you a bunch of junk. Put everything out there for free and just ask that you respond. But I do need to hear from you in order to make it work. If you could take a moment to follow the link below. take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. But if you could take a moment to support the channel, I would really, really appreciate it. I thank you for that. You get a lot of volatility this week because of the Fed, because of options expiration. Keep that in mind. Ultimately, whether we pull back or whether we just continue to march forward, I do think a divergence is developing very similar to what we had over here in the daily time frame on the S&P 500. Again, very similar. Again, you sold off, you got a rebound back up, you formed a divergence, you sold off, you went back up, you got a lower high, you sold off again, and then you moved to new highs. Very similar here. We had a sell-off here, went to a new high. We formed a little divergence on the RSI that gave us a sell-off. We got a lower high, pulled back, and now I think we're going to go on up into this area. I think it's very, very similar to what we see over here. And you can see that on the weekly chart as well. Very, very, very similar. We do go higher up into this level right here. I do think we'll go up into the trend lines I've been talking about on the long-term monthly chart. Then on the weekly chart, again, probably into the 5750 area to 6,000 area. I think Nasdaq will make a lower high. I think it's already peaked. May see the Dow peak, sell off, while the S&P and Nasdaq, if they pull back or if they continue to rally or if they pull back and then rally, see the Dow start diverging with them. This is what I think is going on if you look at it in the weekly time frame. Looking for this divergence right here, and look at the RSI. It looks very, very similar. I think it'll end up going a little higher. We could pull back first. I do think that this is a divergence that is likely under construction. We did move 1 point above the July high today. I think we'll end up moving a lot higher. May pull back first if there's disappointment, initial disappointment with the Fed. Rally going into the Fed, so we'll be watching to see how this unfolds. This is a divergence I'm looking at on the daily chart. Divergence I'm looking at here in the weekly time frame on the S&P. Look at the RSI. Again, we had this peak over here and another peak, almost a Class B divergence where we went higher with price, but almost two equal peaks there. Very similar to what we had over here, the peak over here and the peak over here. Very, very similar to that. And both cases bouncing off the 20-week moving average. And then we formed a peak here and turned down to test the 20-week. Here we formed a peak here. We went down just beyond the 20-week, got back above it, and got a short-term lower high. And now, again, I think we're pushing on higher. And again, a couple weeks later, peaked out. And again, I've told you, historically in the past, at the 2001 first cut and the 2007 cut, 17 to 19 days sessions, the first cut that we peaked doesn't have to be, that's not has to play out, but it's just kind of a guideline. I think we're going to top by early October, maybe late September, but probably early October or on into mid-October. But again, look at here. You've got the diversions going on here, much like the diversions top in late 2021 and early 2022. I've talked about the MACD as well. Look at the MACD down here. Again, it looks very, very similar to what we had in 2022. Again, it rolled over. You got a divergence. It started to turn down, but then it turned back up. And what did we get here? A divergence. We started to sell off. We sold off nearly 10%, and now it's trying to turn back up. It's still below the signal line. We'll probably turn up to it and, again, get something that looks very similar to this with the MACD and the RSI. You got people out there that are telling us the CNBC survey came out. Oh, no, we're going to have the soft landing. What are you talking about? Today, we got the CNBC survey, and the experts telling us we're going to get a quarter point. They might be right on that. I thought that initially, but I've changed my mind. We've had this rally, so maybe I'm wrong on that. We pull back, but I still think we get a topping process. I still think we see a closing high. We moved to a new high today on an intraday basis, but not closing. But they see a quarter point hike or cut with a soft landing expected. This is propaganda from the experts, okay? What they say every time, at every single time when we're about to get a recession. You know what's right? The inverted yield curve. Now it's uninverting and steepening. It's predicting we're about to have a recession. 3 to 6 months away. The market will top out and begin to price that in. You know what's right? Unemployment rate triggering the Psalm rule, the 3-month moving average of the unemployment rate, over 0.5% above the low from the last 12 months. That's predicting a recession. Has been correct for decades. Take these indicators over these so-called experts any day. You got 74% survey respondents. The Fed's cutting just in time for a soft landing. This is propaganda. We're not going to have a soft landing. I say this at every single top just before we have the recession. Soft landing nonsense is a bunch of fairy tales. It's Kool-Aid for the retail investors. The institutions sell into the rallies. 2 weeks ago, we had the Treasury Secretary Janet Yellen coming out telling us we're going to get everything's looking like we're going to get a soft landing. Again, propaganda. Fed comes out and says, we're going to have this soft landing. Again, propaganda. They all know we're going to have a recession. I don't know about these so-called experts are out of touch with reality, but I do know the institutions are selling into the rally. All you got to do is look at Bitcoin and the Nasdaq. We're seeing distribution with the rallies. On social media, the next 12 months are just going to be glorious. The market, Nasdaq peaked. 12 months later, it was down 72%. Just over 12 months later, it peaked and we got the first cut. The bottom fell out of Nasdaq. Bottom until we dropped over 80% later with the bursting of the tech bubble. People that don't believe that's possible, so many people have never seen a bear market. And so, again, they just, the Fed cannot come in, cut aggressively, and take rates down to nothing. They're not going to do that. Inflation's going to come roaring back. Quantitative tightening going on right now. They're going to come in with the QE, infinity, and beyond. I'm not saying they won't eventually do that. I believe we're going to have another banking crisis. They're not going to do it right now. It's greatly favored that we're going to get the bear market intervened at the very start, self-imposed shutdown of the economy with the pandemic. Going to see the market top out, begin to sharply sell off. So again, experts telling us again, no possible way we have a recession. The market's going to begin to price in the recession. The Fed will begin to cut, try to ease the pain of the recession, which they know is coming, but they can't come out and say it. The daily chart, again, what I think is going to happen here with the divergence that's going on, very similar to this. I showed you the weekly chart that, again, I think we're likely going up into this channel line right here, and again, slightly excluding the shadow. Maybe we include it, but I think into the 5750 to 6,000 area, that's where I think we're headed. Maybe we pull back first. It's disappointment, but again, I think these divergences are going to complete. Right now, we're just 1 point above the July high. We'll probably see a strong close above that over week or two or maybe three. It's probably going to end up, again, looking something like this. I showed you the daily, I showed you the weekly, let me show you the monthly. Now here's a monthly chart, and again, some trend lines here from the 2000 top, including the shadow, excluding the shadow. If we exclude the shadow, it's pointing up to this solid red line directly overhead. Very, very close. Long-term monthly channel from the 1929 high. But again, the takeaway here, you get people saying, the bear market, the people that told us this sell-off wasn't going to happen in 2022. They're telling us, no, the bear market, it's over now. We're in the new bull market. This was not a bear market. We dropped 20%. He finds a bear market, hogwash, balderdash, poppycock. You dropped 35% over here in 3.5 weeks. Was that the shortest bear market in history? You dropped 20% right here. You dropped 21% over here in 2011. These were all major corrections. In longer-term bull channel. We dropped below the 50-week right here with the pandemic. We bounced off it over here. You got to close below that 50-week and stay below it like we did over here. We peaked out in 2000, and we had that first cut. Eventually, we dropped 51%. We dropped below that 50-month moving average. I say 50-week, 50-month. And the same thing over here. We eventually took out that 50-month and remained below it. That's really what defines the bear market, along with dropping below the 200-day or 200-week moving average in the weekly time frame. The thing here to note is the divergence that's developing. You have the peak over here, and we had this divergence over here at the 2022 top. You're forming a large divergence. You're getting the same thing here on the MACD. Look at that. And again, by the time this thing rolls over, you're going to have a major crash by the time that MACD rolls over. For waiting for it to roll over, it's too late. The big crash will have already started. That's why we look at the daily charts, the intraday charts on the 60-minute chart, the 4-hour chart, daily and the weekly, because a monthly chart, it's warning that, hey, something big's going to happen. By the time the MACD rolls over, it's too late. The move's been made. Here, I just want to continue to point out, look at every single one of these divergences. Over here, the bear market. Over here, the bear market. Over here, these divergences all led to crashes. The smallest one was here in 2015 and 16 was 17%. Over here, these diversions has led to crash moves, 20% here in 2018, 35% over here with the pandemic, over here 27.5% down to our 50-month moving average. They all played out. We have a divergence developing right here with this previous peak now, very similar to what we had with the pandemic, similar to what we had at the 2000 top with the bursting of the tech bubble with the multiple point divergence developing and drop of the pandemic there. So again, I do think market is in a major top, and again, we know from valuations that the market is extremely expensive. I talked about valuations 2 weeks ago. The indicator, market cap to GDP, and the Shiller PE ratio, they're both telling us that we're about to have a crash because the Shiller PE ratio is above 30. You've got the to GDP hovering around 200%, telling us there's going to be a great reset. And again, that returns are going to be low for the next decade, negative. That's what it's telling us. Oh, no, that's not possible. But it amazes me how people look. I'm looking for a topping process. If you think I'm looking for the crash right now, I'm not. I'm looking for the S&P to go make new highs, Nasdaq to go back and fill the 20,400. Then I think we get a reversal atop and usher in the bear market crash. Amazes me how many people are so willing to drink the Kool-Aid. Probably going to move into a bear market in 2025 here. Chart in 2024, and it's probably going to go into 2025 or 2026. Probably going to come back and take out the pandemic low. Worst case scenario, we come down here. I think you're going to go to that midpoint on the monthly chart. In a second, but don't ignore these divergences. They're warning you what's about to happen. Well, it hasn't played out immediately. It's not going to. That's the complacency that we see at every market top. Look at the monthly divergences. And the crash is 51%, nearly 58%. I've rounded up, but it was nearly 58%. 17 was the smallest one we had. 20%, 35%, 27.5%. Every single divergence led to a crash. What makes you think this time is going to be any different? And again, we're doing exactly forming the multiple point diversions over here like we did with the pandemic, forming the multiple point diversions that we had just before the bursting of the tech bubble. Oh, this time is different. Yeah, right. Monthly, again, we're just below this trend line. I've excluded the shadow here from the 2000 top. That would be in the 5800 area. If we include the shadow, then that's going to take us towards 59 or 6,000. So again, that's where I think we're headed. I think we're going to see this by early to mid-October. All likelihood, we're not going to be able. You have people telling us, "Oh no, we're going to 6,500. We're going to 7,000, 7,500." Again, it is highly unlikely we're going to be able to clear that trend line. The Dow is already slamming into one of its trend lines there. Two trend lines on the Dow, very similar to here with shadows. But a beautiful channel from 1929. Again, S&P started in 1957, but we compile the data here, and you have this beautiful channel. So we know we're in this long-term channel. So I think we're going to form a major top. Again, I think we're coming back to this midpoint right here, just below the pandemic low. I think that's where the bear market will end. We'll probably bounce, and then I think you'll head down towards this level again. If the valuations are correct, you're not going to see these highs for a very long time. Like over here, we peaked right here. You came back and tested that peak. You went 25 points above it, and then you had another crash to a new low. But you went nowhere for 13 years. Here you went nowhere for 16 and a half years. Here you went nowhere for 25 years before you made a new high. And again, in these same arguments, I post some of my charts on social media. Somebody saying today just says, I get constantly, oh, we don't have a recession right now, so this can't be right. Market's going to begin to price in the recession before it hits, okay? Understand we have good economic data. The market tops on good economic data, on positive GDP, a low unemployment rate as it begins to turn back up. We already know it's predicting the unemployment rate is predicting a recession with the Solve rule, as I've talked about at great length of detail. That's what people, and it's amazing. These are educated people buy into the Kool-Aid propaganda put out there by the institutions and the experts. It's absolutely incredible. Easily duped. The herd is to buying into this, and that's why the institutions do it, because these people are nothing but sheep. I work for so-and-so institution and CNBC survey. Well, when we have the recession, 3 to 6 months from now, people are going to say, oh, the Fed should have listened to me. Oh, they should have started cutting sooner. We wouldn't have had they should have listened to me to try to save face. I believe we're in a topping process, and I believe we're going to top in this area. We're probably going to go higher for a couple of weeks, and then I think the top is going to be in. It's highly unlikely we're going to get above this area, but people believing, oh, the Fed's going to do what they did in 2020. No, they're not. Can't, unless they want inflation coming back like in the 1970s, come roaring back. Again, and I'll believe the recession indicators any day. These experts that keep telling us, oh, no, we're going to have the soft landing out of the Fed. Again, we're likely very close to a top. I think happens with the Fed. Again, pullback, disappointment if we don't go 50 basis points. Initially disappointment. I think you got a pretty good shot. We're going to go up and hit this level here of these trend lines. Just under the red trend line there, just slightly. And if we go a little higher, we might hit that in the 57, 5800 area, or hit the one including the shadow and go up to 59, 6000. But I think you're going to see a very similar top to the 2022 top that I showed you on the weekly chart and the daily chart. We'll be watching the trend line on Nasdaq. Do we turn off at this level, or do we try to get above it? We'll be watching. Do we go parabolic, or do we pull back and then try to go back up? But I don't think the top is in on the S&P until Nasdaq fills this gap at 20,400. It's already peaked. I don't believe the S&P has. I think the Dow could possibly be peaking here. I talked about that possibly happening at this peak. Now you're forming a triple diversion. So again, I'll be watching the Dow. It's possible that we see so often the Dow just start going and Nasdaq and S&P eventually go make a new high, or S&P go make a new high. Nasdaq fill the gap. Dow already peaking. That is certainly possible. It's got this long-term channel on the weekly chart. If you include the shadow here, we're just below that level, but you've got this negative divergence here. You got the negative divergence in the daily time frame. So kind of interesting, and you've got this negative divergence forming on the MACD. So again, watching this trend line and the long-term trend lines in the monthly time frame. The divergences are suggesting, again, the Dow is in a topping process, but what a nice looking channel on the Dow. About the long-term channel on the Dow, again, this trend line from the 1899 peak, coming up here, and again, I've included shadows, excluded shadows, but again, you're coming right up into this area here, and a similar channel to what we have with the S&P with the 1929 peak, but good chance the Dow is not going to be able to get above this trend line long term, and it's going to react off of it and eventually come back, test the pandemic low, and the midpoint here is where we had the 2009 bottom there. Really unlikely we're going to be able to clear a trend line 125 years old. Again, there might be a little bit of wiggle room, but you saw the channel on the weekly chart, you saw the diversions in the daily time frame, and again, already hitting the lower channel there of the boundary of the upper boundary there on the Dow monthly chart. Nasdaq 100 has already hit the upper boundary. It is likely going to take out the pandemic low and eventually come back to this point right here, which is around the 5,600 area. That's where I think we're eventually headed. I think we will see the pandemic lows taken out, and this trend line comes in just below that. You don't understand. AI. No, I understand. They said the same thing about the tech bubble, with the tech stocks, the bursting of the tech bubble and the .com stocks. Most of them did not survive. AI. Well, you know what? AI is going to be getting, NVIDIA is going to be getting a lot of competition. It's amazing. The AI bubble, they're saying the same exact stuff that they said with the .com bubble, bursting of the tech bubble. Fed, if Nasdaq can clear this trend line, if Bitcoin can clear its trend line, then that would be a sign of strength. If we get rejection off these levels, that would be a sign of weakness. Here you can see we tried to pop above it and we ended up closing back below it. Let me show you the 60-minute chart. Nasdaq 100 closed flat, up 9 points today, up 0.05%. But here, again, we formed this divergence with the RSI. I talked about this earlier in the week. On Monday, the possibility of divergence is developing. We tried to get above trend line, but it only completed a divergence. We ended up dropping back below it. So again, if we can get above it, that's a sign of strength. If we drop back below it, remain below it, then we can get a pullback, or that's a sign of weakness. Again, I still think if this is a 5-leg push down, which I believe the top is over here, I've made that clear. We have an ABC move under construction. When we hit the peak over here, we are slamming into major resistance on that monthly chart. We are slamming into major resistance in the weekly time frame. It was this trend line right here where they intersect this upper boundary and this boundary here, which is a parallel channel, not the same one on the monthly chart, but a parallel channel from the pandemic low. And eventually, I think we'll get above this trend line that we broke here. We broke it, got back above it, and we're testing it again now, being below it. I think we'll eventually get back above it. Maybe we pull back first, but I do think early to mid-October, I think we'll go back and fill the gap at 20,400. But I told you over here we're going to have a sell-off. I told you, again, the day, watching the rally, watching for a CPI sell-off on July 11th. Signals at extreme and warning signs of a top there by the July 10th peak, and I showed you all those signals. Told you the day after we peaked on July 11th, thought the July 10th peak was it. Still think that nothing has changed. If I'm wrong, we go back up and hit this trend line one more time and overthrow it. Even if we hit the trend line one more time, we still may not move above this high where we did overthrow it. So do keep that in mind. Nasdaq will make a lower high. I think S&P will make a higher high going into this trend line right here. In all likelihood, beating this top, as I've been talking about in the video and in my videos over the last few weeks here. I showed you this trend line and the divergence on the 60-minute chart of Nasdaq, and again, eventually, whether we pull back or break this trend line or break it and just keep going and go parabolic, I think we're going to this area. Let me show you the 60-minute chart of the S&P. Chart of the S&P. Again, we formed a divergence on the RSI, almost two equal peaks on the RSI there. Price went higher. We got, just over 1 point above this previous peak right here at 56.69, rounding up 56.70. We went up just above 56.70, and we had a high at 56.70.81. So just over a point above this level right here. Again, I personally believe we're going to see some closes above this area, whether we pull back first. Disappointment that the Fed isn't going bold with a 50 basis point cut, or that we just go parabolic and start going. However it unfolds, I do think we will see higher highs on a closing basis on the S&P, but then I think we're going to top early to mid-October, maybe late September. Maybe it happens sooner. It has in previous history. Regardless of which way it plays out, I'm going to be looking clues on the charts I'm showing you, but I do think the topping process will complete. We'll start a reversal, usher in the bear market. And when we get the next sell-off, they're telling us, oh, there's no possible way it's ever going to happen. Telling us, oh, the market looks attractive now after this. The people that told us the 2022 sell-off wasn't going to happen. When we started seeing the dramatic drop, we had dropped 50%. They said, oh, the market looks attractive here. These are the same people that told us a Russell will be going up by August 40%. Likely diverging from the S&P 500 as the Dow and the Nasdaq are diverging. I think we'll go higher, but I do think we'll complete the topping process, and I think that's going to be over the next few weeks here. See if we get a pullback if the Fed disappoints, or if it applauds the Fed. Do we get a rally? Does the Fed get applause, or do they get booed? Which is it going to be? We'll see what happens.